Hey everybody, welcome back to the channel. I was having a really good day yesterday. A lot of things were going well. Got some meetings done, got some stuff done. A lot of things were progressing. And then at 8 o'clock, I was on a meeting with a client call. I get a text from Emmanuel. Emmanuel, you know who you are. And he's like, hey, your girl dumped a lot of shares. And I'm just like, what is going on? Oh my goodness. And then I see the news. So if you haven't heard by now, and if you're watching this channel, you probably have heard by now. And if not, the thumbnail and title probably got your attention because you're like, what happened? Cathie Wood sold off about 3.137 million shares of Palantir. So some quick facts. She sold off 275,000 in one of the funds, 447,000 in the other, 1.4 million in the other, and 944,000 in the other. Call it around an even 3.1 million shares. Top line thesis. I'm going to go through a bunch of thoughts that I have in this video about sort of explaining what this is going on. But for those who just want to get sort of my main bottom line, this is not a big deal. And I'm not saying it's not a big deal just to like give you guys confirmation bias. It's actually not a big deal. So watch the rest of the video and sort of understand my logic and reasoning for why it's not a big deal. This is something that's most likely around rebalancing her portfolio. And there's a lot of reasons why that's true. There's a lot of historical reasons why that's true. And there's a lot of market dynamic reasons and particular timing reasons, literally for why January 31st, why I believe it's more than obvious for why she made that sale. Why she sold off that stock and why she bought in some other stocks. So let's get into the reasons. Overall thesis, I don't think this is bad. I don't think this is a bearish sell at all. I think this is a basic rebalancing. I manage $55 billion of a fund ETF type of sell, which means I'm going to have to sell off a lot of stocks and buy a lot of stocks. So it's not the biggest deal in the world, and I really wouldn't worry too much about it. But let's get into the details. First thing to discuss is Tesla. Cathie Wood bought around 29,000 shares of Tesla on January 31st, 2022, which equates to about $25 million if we multiply that by around 870. So it was at lows of 850, got to highs of around 930. I'll cut it in the middle. I'm like, okay, 870, let's say you got it. Might be a little bit up or a little bit down. Probably a little bit up, though. So at that point, if you're buying 25 million shares or $25 million of a company on the day where it's likely going to be priced at one of its lowest prices in the past couple of months, you're going to have to unload a lot of stock in order to be able to do that, even if some of that stock is of high conviction. My thesis here is that Palantir was one of many stocks that she was selling off. Now, she didn't liquidate her Palantir position. Liquidation means you're getting rid of everything and you're just taking the loss and you're just holding onto the cash. It seems like she liquidated Skills, which is like this gaming company. At one point it was like $43 and now it's at $4. That might be one of the companies that actually doesn't survive this crash. That's one of those companies that actually might like be a .com bubble type of crash type of stock, just because I don't know if it survives this sell-off that we have going on right now. She was buying it around $10, $11. Obviously it seems like she made a mistake on that and she's just like selling the crap out of that stock. So that's where you get like a full liquidation. In the context of Palantir and a lot of other stocks she sold yesterday, a lot of it to me was not because she's bearish against the company or something fundamentally changed with how she evaluates the company. It's more so a question of, I need to free up $25 million to buy this Tesla dip. And this Tesla argument that I'm making here, I really don't think you should be undermining it. Tesla does not go below 900. I mean, it was stuck there for a while. And once the Hertz deal came out and they started getting positive momentum, ran all the way up to 1200. Multiply that by 5, that's what you get post-split. That's a trillion plus level market cap. It's very unlikely you're going to get Tesla at below 900, but because of the macro level economic dynamics that have been going on, Tesla actually dropped to below 900 into the 830s, even below 800 at one point. And anyone who knows anything about just basic valuations and models and growth potential and literal numbers of how they're planning to grow 50-60% year over year, Tesla's a company that is very undervalued. It is properly valued or undervalued, people would say. And for Cathie to be able to scoop up shares below $900 to me is just like a phenomenal move. However, as a result, some of her less conviction names, which isn't really less conviction, but just like not all in, I gotta get more Tesla shares types of stocks, which Palantir is definitely included in, along with a lot of other stocks, those have to be sold off at that point. So I think that's sort of the first reason. She was selling off a bunch of stocks. She had to load up the boat on Tesla. The opportunity cost of holding Palantir while not freeing up that money to buy Tesla at this insane, ridiculous dip that Tesla is at, which is why it's really important to understand the Tesla psychology here, versus not buying the dip on Tesla, makes more sense to then buy Palantir even at a higher price. So like buy high, sell low type of strategy, because you're buying the dip on Tesla. Like the Tesla dip is that important given the opportunity cost of holding a stock that could free up cash to be able to buy Tesla. Second argument I have, none of it was sold in the ARK Innovation Fund. So everything was sold in a lot of other ETFs, which means to me, she was trying to balance out a lot of the ETFs and not necessarily balance out the ARK Innovation Fund. Tesla is around 6% of the entire fund, and Palantir is about 1.8. So the idea around balancing a portfolio is the weight in relationship to the percentage up or down that a stock goes in relationship to the portfolio requires it being balanced. So for example, Tesla never gets to become more than 10% of the portfolio, I believe, or more than like 11%, because there's like legal rules that ETFs have to deal with, but there's also fund rules. So like the investors that pour a lot of money into ARK manages about $55 billion. They have some rules over how much you can consolidate into one position. Now they gave ARK a lot of free, leeway over the past couple of years because ARK has been right about so many things. But nonetheless, there are still legal rules and there are fund manager rules for how the investors that are investing in the fund ultimately have their money allocated. So like if I'm an investor in ARK and I gave like $200 million in 2016, I probably don't want you to have 85% of your portfolio in Tesla, right? Because like I'm investing in an ETF for a reason. Now you can have 10% there and only Cathie Wood is able to get away with that. A lot of other hedge funds or institutions and ETFs are not able to get away with that, especially on such a speculative asset like Tesla was back in 2015. But Cathie was able to get away with that, right? That's what makes her Cathie Wood. That also gave her the ability to then get away with taking some other pretty big bets. Not all of them she's been right on, but a lot of them she's been decently correct on. And hopefully Palantir is another one that she's going to be correct on as well. However, balancing the portfolio needs to happen. So to me, if she didn't sell anything out of the ARKK Innovation Fund, which is like the flagship fund that has about 23 million shares of Palantir, that means that fund is kind of like set the way it needs to be. She wants to add to different positions in that fund. But on all the other ones like fintech and genomics and all that stuff, which by the way, Palantir is one of only 2 stocks that are in every single family of ARK ETFs, meaning every single innovation funds or ETFs that she believes is going to play a major role in the future, innovation, flagship, fintech, genomics, etc. Palantir is involved in that, right? Because Palantir is one of those companies that is just so dynamic and fits into all of these different roles. As a result of that, those portfolios need to be rebalanced, especially because she was selling and buying on a lot of other different stocks that we're going to talk about in a second. But the main flagship fund did not have Palantir leave away. To me, this is a rebalancing move on her portfolio. Which means if it's a rebalancing move on her portfolio, you can definitely expect in the next couple of weeks, probably after earnings, if she really likes what she hears, and I'll talk about that more in a second, for her to buy back in again. I really don't think this is a bearish sentiment. I really think this is a general rebalance your portfolio type of strategy, and Palantir just happens to get sold off at some of these prices in order to free up cash in relationship to the percentage of the portfolio moving up or down. Palantir is still one of the only stocks that is in all 6 of the ARK Innovation ETFs. Okay, next thing we're going to talk about is 2 things that she's done before, which is selling before earnings, which happened during Q2 as well. So before the last earnings, she sold before earnings, and then she buys back in if she likes what she hears. This is a general strategy that a lot of fund managers use, which is like, look, we don't know what things are going to be like going into earnings. Obviously, we have conviction. She still has 33 million shares of the company, right? So in proportion to what she sold, there is a heavy position of Palantir in ARK, but they want to shed a little bit because it just makes more sense. Going back to my Tesla argument, like Tesla had a phenomenal earnings and it's still massively undervalued. So it's like, okay, one company that we're deep into had a phenomenal earnings, massively undervalued at prices that are like literally ridiculous if you know anything about numbers and how Tesla should be valued, which means let's sell the stock off that we don't know what their earnings is going to be like because she's not special, right? She's not an insider. She literally does not know what's going to happen in earnings, even though she has a great research team. She has no idea. So it's like, all right, let's wait to see what happens in earnings. If anything, the opportunity cost is going to be greater if we don't wait to see what happens and we we continue to hold the stock. Let's sell off the stock and let's go buy something else. And the reason I'm mentioning this is because she's done this historically with a lot of other stocks, not just Palantir, right? This is something, and again, this is something a lot of fund managers do. They're like, all right, it's in a sucky position right now. Let's wait till earnings happens. We'll probably load up the boat after earnings. It'll make more sense after that. Let's free up some cash that we have right now and put it into the stocks that have actually showed a good earnings. As a result of that, there's higher conviction names. So Hood is a stock that she doubled down on. She made 190,000 share purchase the day she sold Palantir, which was yesterday, and she bought about 1.9 million shares after they tanked earnings and they went down to like almost $9.80. And I did a video, by the way, on things I think Robinhood needs to do to save its company. I'll leave that in the description. I think there are some ways they could innovate, but it's getting a little tough for Robinhood. Nonetheless, Cathie Wood has some respect for Robinhood, right? She's doubling down on this bet on Robinhood, and Robinhood was actually up 11% today. As a result, if you need to free up capital to buy a massive dip that's where you start selling off different parts of your portfolio. So for example, if Palantir were to get to like $8, right, and be like absolutely insane and ridiculous, which Robinhood is at, but it was at $9. Even after, now Robinhood had a horrible earnings, but let's say it had earnings that didn't justify it to drop from like 12 to 9, right? That's like that's a pretty big drop even in this market that we're having, because it's already so beaten down from a high of $85. At that point, if I'm a fund manager and I'm like, I know something about Robinhood that the rest of the world doesn't know, whether or not she is right, we don't know. But let's say she believes she is right. Why would you not just go like literally deep into the company, right? And that equates to about 2.1 million shares that she bought of the company. Because if she knows that at $9, Robinhood is like, it's not even a steal anymore. Like it's like cheating at this point, buying it at that price. If she believes what she genuinely believes about the company, which is that it's going to be the consumer facing product of the world and it's going to be like the most special financial services product ever, then you've got to free up some cash to buy that, right? You don't get that anywhere. So when people are making the argument, why does she sell Palantir for Robinhood? Like, it doesn't make any sense. It doesn't make any sense if you're a Palantir bull and you don't care about Robinhood. It makes all the sense in the world if you are Cathie Wood, who is a Palantir bull, but she has enough of Palantir to the point where she can shed off some of Palantir because nothing is happening in the short-term price action with Palantir, but a lot of stuff is happening in the short-term price action of another higher conviction stock. And I think that's the real thing I want people to get out of what I'm saying today. If there is nothing happening in the short term for a stock that you have a 5-year horizon on, and by the way, at the end of this video, you're going to hear Cathie Wood talk about Palantir so you guys can get a little bit more understanding of how she really thinks about Palantir and the investment. Then if something is happening in the short term for another high conviction stock, you got to sell that stock, right? So like, for example, imagine if Tesla went to $600. I would imagine, what's her name? Cathie would start selling Teladoc or something, right? Because like those prices, they stop making sense anymore. And when they stop making sense, the greatest opportunities of a lifetime are at those prices, especially when they're massive dips and they're undervalued, right? It's not like people don't know Tesla should be more than $600. People know it and the market's still not respecting it, which is what she feels with Robinhood, which is why she made the purchases in Robinhood and some of the other stocks she bought the other day for selling Palantir. I think that's the main sort of core thesis that you need to get out of this. This is not a bearish sentiment for selling. This is a fund rebalancing and buying a massive dip by selling something, even though she bought at 16, selling at 13. When you're playing with hundreds of millions of dollars, that doesn't matter, because if you buy Robinhood at $9 and Robinhood is up, and it literally happened, right? She bought it at probably $9, $10 at 1.9 million shares, and Robinhood's up to 14. So all the money, theoretically, right? You could play it out, the numbers, how they work out. You lost in Palantir from selling from 16 to 13. You probably made up in the 2 million shares that you bought from something that went from 9 to 14. And let's say Robinhood rallies to 18 by the end of March. I mean, that's like a 50% gain on your money. Like that's really decent money, but you needed the capital to be able to allocate at the time. And I'm assuming same thing that would happen at Palantir, right? If that dropped to like $8, $7, it would be absolutely ridiculous. She would be selling off some other stuff to load up the dip on that. It's simply a question of where are your convictions in the short-term movement of the stocks that are happening, but it doesn't reflect the long-term outlook that a fund has on a stock unless they liquidate their position, which is what they did with Skills. She has not liquidated her position with Palantir or any of her high conviction stocks like Teladoc, Roku, Zoom. She's just gone deeper into them. I also want to say this is a strategy that she did with Tesla, right? Like literally up until this dip that Tesla had, she was selling like 1,000 or 2,000, 3,000, 10,000 shares a day. Now Tesla, she has so much of Tesla, so obviously it was still her highest position, but she was selling a lot of it. And Tesla investors were really getting annoyed, right? Because they were like, why do you keep selling stock? Don't you believe in the growth potential? And it's like, of course she believes in the growth potential, but when you're at $1,200 in a upcoming very bearish market that I'm pretty sure she was able to see, because it was like September and from January, a lot of stocks have been beaten up. Tesla was going nowhere. And then randomly in October, November, Tesla jumps up to 1,200 after being stagnant within 500 to 600 and then 800 and then finally 1,200. That probably means the market is overvaluing it, not on fundamentals, but on short-term dynamics, right? So it was a brilliant move to start selling it at 1,100, 1,200, 1,000. It was brilliant for Elon to do that as well, because the market was just not going to let Tesla stay at 1,200. Like no matter how amazing a stock is, if the entire S&P and NASDAQ is falling, like Tesla's going to fall as well. So at that point, she started selling, and it wasn't a bad move. It didn't mean she didn't believe in the growth of the company. She still had 8% of her entire portfolio allocated to the company. It just meant that in the short term, this was the best time to sell because it's going to be at a way cheaper discount if she was right about the market dynamics, which a lot of people, it didn't take a rocket science to be right about what was going on in the market. You could get it at a cheaper price. But you needed to have capital to be able to allocate towards that. So that's sort of my point. It's like she's been selling off Tesla already, not because she didn't believe in Tesla, not just because she didn't believe in Palantir, but because there's a better buying opportunity, and you have to understand what's going on in short-term macroeconomic dynamics. That doesn't change the long-term trajectory, that 5-year horizon that you have on a company. Additionally, she has 33 million shares of Palantir, and she has, as of today, 25 million shares of Robinhood. So even with all the selling of Palantir, which is about 3.1 million shares today, she still has, 8 million shares less of Robinhood than Palantir. And that's not to directly characterize Robinhood and Palantir. I think Palantir obviously has a variety of different growth potentials that Robinhood doesn't have. But it's just to contextualize, like, even with all the buying that's been going on from Palantir money, let's say directly going to Robinhood money, Robinhood is still 8 million shares less than the total allocation of shares that Palantir has in ARK's family of ETFs. So it's important to recognize, like, when there's a small dip and you got a vulture that's just willing to buy up as much as possible because of the conviction that they have, they've got to allocate some free capital. They've got to sell off some stocks. So if they have 37 million shares, but they want to have a balanced portfolio of Robinhood and Palantir, you've got to sell something. And it just makes the most sense based upon all the dynamics to, at this point, sell Palantir. Why is that the case? I don't necessarily know, but I do know that doesn't mean it's a bearish sentiment. I just know that means that there has to be some money to be freed up in order to buy the dip on Robinhood. Now, when should you start worrying? You should only start worrying if this becomes a trend and it starts offloading. Is it going to happen? I have no clue. I would be willing to say my bets, which is that because Cathie Wood and ARK has a very long 5-year horizon on Palantir, and I'm going to show a clip at the end of this video to sort of show you how she thinks about Palantir, that's likely just not going to happen. It's like, it would be like selling off Teladoc or Roku. Like when you load up 37 at the highest million shares of a company, it's very unlikely that in a course of a month, you just forget about that company, especially given the leadership, the management, all the deals that Palantir has been doing, et cetera, et cetera. Like, it just doesn't make any sense at that point. So I really do think this is a balancing decision. Now, if we see over the next coming days and coming weeks that she's just dumping and every day goes from 33 million to 30 million, 27 million, 24 million, right? And then one day goes to 20. Like, if that starts happening, then you're like, okay, she's not believing in the company anymore. It's not just a question of allocating capital or freeing up capital, because like, you don't need that much capital, right? A rebalance is like, again, a couple million shares, and it sucks that it's a couple million shares, but it's not tens of, 15s or 20s of millions of shares. So we will see. Time will tell if she really is bearish against the company. I just don't think anything has changed in the macro for Palantir. In fact, everything has gotten just better in terms of the deals that have been launched. I think Q2 earnings are going to be awesome, or Q4 earnings, but I do think she wants to see earnings. She's historically been known to wait and see earnings, sell before earnings. She's literally done that with Palantir many times, and then buy after earnings. Even if the opportunity cost is high, it's better than holding on to that right now when there's short-term dips in something like Tesla or Robinhood that she has a high conviction for as well. So at that point, I think that kind of sums up why the selling happened. I don't think it's something to really stress about. I don't think it's something that should keep you up at night. I do think it's something to just sort of understand. I also don't think people should like be disparaging Cathie Wood. They're like, screw Cathie Wood. Now Wall Street will finally like Palantir. Like whatever she touches is garbage. It's like, I don't think that's the case. I think Cathie makes some pretty awesome decisions, and she has a really strong research team. They just published this entire artificial intelligence analysis that I'm going to be talking about in upcoming videos around big data. And it's like, like they published like so many pages of research that they put probably so much money and effort into trying to figure out this analysis and argument around artificial intelligence. Their whole investing thesis for Palantir is that it's going to be one of the biggest players in the AI big data analytics space that's going to have a role in every single sector in the economy, which is why Palantir is part of every single sector of the ARK ETF, right? One of only 2 stocks that's part of all those ETFs. Which means if that's the point, I heavily doubt their entire strategy or bullish ideas on Palantir has changed, because nothing in the company has changed. Right. So like, it just doesn't make sense to just wake up one morning and be like, oh, I'm out of it. Like, you have a fiduciary obligation to all the shareholders and all the investors that like gave you the money to make those purchases. To just sell it all at a loss with no logical explanation doesn't make any sense. So I really do think this is not bearish. I do think this is rebalancing. And I don't think makes any sense to disparage Cathie Wood and like call her names for this. I just think she had to rebalance like any responsible portfolio manager has to do, which means it's not a reason to like get upset at Cathie Wood. Okay, those are my thoughts. I don't think it's the biggest deal in the world. I do think you should be able to sleep later at night. Palantir is still a phenomenal company. I'm still going to be covering the company very heavily, and I really believe in the long-term trajectory of the company. And yeah, this is just stuff that happens when you are a high growth tech stock and one of the highest followed, most transparent ETFs on the planet. Last thing you guys are going to see is a clip of Cathie Wood talking about Palantir. She was talking about this when Palantir was about $29. It should give you a little bit of context over how she thinks about Palantir for the long term.
Let me ask you about Palantir, which we just found out you've added to. Can you tell our viewers why You added rather significantly to your stake in Palantir?
Yes, they reported yesterday, and the stock was down on the report. It's interesting to listen to the CEO. He was speaking our language. He essentially said to investors, we are playing in a massive space here, and we're going to invest aggressively now in order to capitalize on the exponential changes that are taking place here. So if you are short-term in your focus, you probably don't want to spend too much time investing in Palantir. So that's music to our ears because, and we do believe more and more companies are going to start behaving in this way instead of catering to short-term time horizons and what we would say, in some cases, short-sighted shareholders who are much more interested in profits now, dividends now, share repurchases now, than they are in a company investing aggressively, foregoing short-term profitability in order to really to catch some very big waves out there. So I'm astonished. Their revenues are still 61% government, but I've learned, and I think most people in the innovation space have learned over time, that some of the most important innovations in our lifetimes have started in the government, especially in the defense sector and in the intelligence sector. So we think in many ways, and they won't talk about how, but they're certainly garnering a lot of business, which tells us that they are seeing in the future and investing in the future in ways that companies, governments, but increasingly companies are going to need, especially as we're competing against China. I think we've been, again, with this short-term time horizon, we have not been spending enough in innovation. And so, Palantir's attitude is refreshing. It's exactly how we invest. We want our companies to invest aggressively. We don't want profits now. We want them to invest aggressively because we're moving into many winner-take-most markets. And the autonomous taxi world is a very good example of that. That is why our confidence in Tesla, going back to the largest position in our portfolio, is so high.